It was established. So the issue of converting the then Lagos Stock Exchange came up.
You have a market now where in 2010 the federal government can issue really significant sums to support the activities on the fiscal side.
My vision is that the Nigerian capital markets will clearly take its place, which is first that it's a gateway to Africa, in addition to being one that provides adequate returns for investors, whether local or international, that it's one where people feel that their assets are safe.
Sponsored by the Securities and Exchange Commission of Nigeria.
Welcome back and welcome to Investment 360. First up in the hot seat is Bronwyn. She is Portfolio Manager at Cadiz Asset Management in Cape Town to discuss the Cadiz Absolute Yield Fund. Bronwyn, a very good evening and welcome to the program to you. Let's first begin by perhaps looking at the strategy behind your fund. What exactly do you consider?
Well, basically the fund targets investors in the retirement stage of their lives who are basically needing a real return above inflation while not taking on too much risk. So what we try and do is look across the spectrum from the low risk side on the government bond side all the way to the high risk spectrum on the corporate bond and listed property stock side while trying to minimize volatility as far as possible.
So what are you invested now? What are the different proportions of the fund? What do you have in there?
Well, basically what we try and do is we take away the complex decision of the investor between bonds and cash. And at the moment we believe that the inflation risks are to the upside. So we believe that we need to have a very low weighting in fixed rate bonds, so minimize fixed interest exposure in the fund and mainly position the fund in floating rate bonds so as to minimize interest rate volatility.
Bronwyn, do you have much corporate bonds within the portfolio at the moment?
Yes, we do. And one of the fund's focuses is to target yield enhancement as a means of bringing extra alpha into the fund. So we do focus specifically on corporate bonds. And many of the top 40 companies will have corporate bonds listed on the JSE, and what our job is to try and assess whether the yield pickup we're getting from investing in those corporate bonds compensates us for the underlying credit risk inherent in those bonds.
Yeah. Are you finding it difficult to find value in those bonds?
At the moment, what we found is that spreads have narrowed significantly, so it is becoming a more complex task. However, there definitely are opportunities available in the space, and what we do is we search across the yield enhancement spectrum. So, for instance, at the moment we're seeing value in inflation-linked bonds and specifically property stocks, so we've upweighted our holdings in property. So where corporate bond spreads have narrowed, we'll naturally go to other asset classes that are offering value.
Bron, can we just go back to the discussion on inflation-linked bonds? You said that you feel that there's some upside risk to inflation or interest rates. Firstly, yes. What is your expectation with regards to interest rates and when the Reserve Bank moves? And are you up or have you upweighted the value of inflation-linked bonds in the portfolio?
Well, it's an interesting question. Basically, the fund focuses on a real return of 3%. So in order for us to achieve that for our investors, we need to invest in inflation-linked bonds that have a minimum of a 3% real return. So that would preclude us from the government bond inflation linker space. So we have to look to the corporate bond inflation linker space. And at the moment, what we're finding is that not a lot of corporates are actually issuing inflation linkers in the space. Having said that, there are opportunities in terms of structuring inflation-linked deposits through other means. So where we can, we are picking up inflation-linked exposure. It's not easy, but we are naturally moving in that direction.
Yeah, but you also consider the listed property portfolio sector. What are you finding there?
We actually are seeing value in the property sector at the moment. Vacancy rates have declined significantly since 2010, which basically means that there's potential for further upside and income distribution growth. So property valuations are looking more positive, and we've upweighted our property holdings in the fund. Having said that, though, the property holdings in the fund are still, relatively low. We'll never go above the 10% level because we believe that for this space it brings too much risk for the type of investor that is in this fund.
Bronwyn, recently the fund won one of the Morningstar Awards, and as far as I know, the Morningstar Award is really where you are balancing return versus risk. So it's the return of risk that you're taking on, which suggests that your fund is fairly good at managing not just the return but the risk component. What sort of approach have you adopted to try and minimize the risk component in the fund?
Well, basically, I think what we're very good at is diversifying across all the different asset classes. So diversification is a key source of minimizing risk in the fund. So across the yield enhancement spectrum, we will diversify. Also, what we try and do is minimize, as I mentioned, interest rate risk. So not introducing too much long bond risk into the fund, which does bring about long drawdown periods and negative returns. So we stick to the short end of the bond curve and we take duration bets around that. But generally the fund has a very low interest rate risk position in the fund. So it's unlikely that we will be very long duration. At the moment, I said we're probably the shortest we've ever been. So the potential for long negative drawdown periods is minimal.
Yeah. So when you look at the spectrum of investments that you look at, if you perhaps can give us a sense in terms of value, where you see the most value in terms of in order of opportunity.
Okay. Well, as I said, we look across the yield enhancement spectrum. So we do still see value in corporate bonds, although spreads have narrowed significantly.
Is that in order of importance? Is that in order of where the greatest value lies?
Yes, I would say probably corporate bonds. Then we're looking at the inflation linker space, and probably thirdly the property space.
Bronwyn, can you just clarify for us, is there any offshore within this fund, or are these all domestic assets?
We do have some offshore exposure. However, we won't take rand and any currency exposure into the fund. So everything that, if we do invest in an offshore asset, the currency risk is hedged within the fund. So there won't be any currency exposure as such in this fund.
But what sort of percentage ends up being offshore typically?
Very low, again, probably less than 10%. We won't typically, I think the maximum is 20%, but at the moment the exposure in the fund is at less than 10%.
Bronwyn, Portfolio Manager at Cadiz Asset Management, thanks for joining us tonight from Cape Town. After the break, we speak to Von Henkel, strategist at RMB Morgan Stanley.